Right, morning everyone. Welcome back to Morning Cup. Happy to see you guys again. Right. Okay, for the S&P 500, right? Well, it rose yesterday to close at 6950.22 points on Monday, as the investors bought on the big tech, like Apple, Microsoft ahead of their earnings report later this week. I think betting on the strong AI, AI driven as well. So the energy stocks also led the rally, driven by the Baker Hughes, which beat profit estimations due to the booming demand for the LNG, helping the market to ignore the record high gold prices and lingering tariff fears. So yeah, for this index, right? I think expect the market to remain in a holding pattern today until the Microsoft and also Alphabet report earnings uh, after the bell. So the 6090 uh, 6950 points level is now the support, right, after the breakout yesterday, but volatility was spiked. So if the bullish momentum to strengthen, we'll see that the next resistance is at 7,100 points level. Right, so for the US trading stocks that we have published yesterday, we have iron, right? So stock code iron. So the stock is experiencing a breakout above this 55 US dollar level. So we can now expect the stock to travel towards the $60 level and a strong momentum, followed by the next resistance at $65 dollar level. So now if the counter to reverse, do watch out at the $50 level for the immediate support, as it could indicate an initial trend reversal signal, right? So also next we have EQX or Equinox Gold, right? So if you look at the charts right here, the counter charted a higher high market structure, right? Reaching this $16 level, eyeing to reach towards the $17 level. So if the stock to climb up higher, we could see that it might travel towards this $18 level. And now the stock to slide lower below this $15 level support, this might shift to bearish structure, right? So for the China A50 futures, well rebounded on yesterday's session, or Monday session, right? As the tech sector rallied on the reports that regulators have given the so-called green light for Alibaba and also Tencent to order the H200 AI chip. So I think sentiment was further boosted by the CSRC announcement to open nickel and also lithium futures, right, to the foreign investors starting today. So I think this reform signal lifted the mining stocks like the Zijin Mining to 899 to almost 5% yesterday, right? And counted the morning gloom from Trump's threat to impose the tariff on the Canada recently. So yeah, for this A50 futures, expect a positive momentum to continue today, right? I think the Nvidia news is the game changer for the AI sector, and which likely sparking a short covering rally in the tech heavyweight. So at this juncture, we see that the immediate support is now pegged at 14,700 points level. However, if the rebound to continue to trend higher, we might see it to trend higher or to propel higher towards this psychological level of 15,000 or even 15,500 level, right? So for WTI crude oil futures, will retrace slightly to close at 60.82 on Monday's session as the supply fear faded, right? Also, I think report confirmed that the Texas power grid successfully withstood the winter storm without major failures, meaning that the oil production in the Permian Basin remains like largely uninterrupted. So, yeah, the selling was also driven by the news that the Kazakhstan oil export are set to resume, removing also the another supply risk from the table, though the losses were limited by the lingering tension over the U.S. Naval armada heading to the Middle East, right? So, yeah, to me, the way I look at it is that we expect a choppy or sideways trading for today, right? As the market wait for the API inventory data tonight, with the weather weather panic um, is gone, right? So I think the bulls need a fresh catalyst to break this $62 level or even to trend higher. So, but for now, we still keep our positive trading bias unchanged, looking at this 62 or even 65 resistance, with stop loss now is at $58 dollar level. Right? So for our Malaysia market, okay, well, the KLCI surged higher to close at 1744.07 on Monday session as the foreign funds aggressively accumulated in the banking heavyweights, right, to capitalize on the ringgit hitting high against the US dollar. So also, if you can see here, the darker green spot, the color, right? Aviation stocks, also on fire yesterday, with AAX and also the capital A gaining 19%, 8.26%. As the stronger currency significantly reduces their fuel and also their cost lah, right, making them top currency, currency play. So for this KLCI, IBM KLCI, so we expect a rally to extend to at least 1750 or even 1760 today, right, with the ringgit remaining strong and also the foreign inflows accelerating. Yeah, I mean the FOMO is now driving the funds to chase the breakout, right? Now, if you see the FKLI, right? Yesterday it has broke out our previous resistance once again, and now heading towards the 17,000. Sorry, 1750 points level. I believe that the market sentiment remains positive and strong, and likely to propel the index higher towards 1790 points. So yeah, we are still observing the market now, and our stop loss is at 1670 points level. Yeah. Also, one thing to highlight is that I mean, in terms of day-to-day performance, top gainers are still coming from the financial, the banking sectors, right? Fine is normal. But the highlight is that the consumer stocks, which at 1.62%. And if you still remember in our 2026 strategy report, we highlighted that the Visit Malaysia catalyst for this sector, right? So let's monitor um, this sector together. So and also for consumer names, we have a few in hand. You can take a look later. Yeah, this one and also this one. Also after this, let's listen to Siang for the Eco Shop results review. Okay, so for our Malaysia trading stocks, we have four trading stocks, four Malaysia trading stocks for today. Firstly, we have Leong Hub LHI. So the stock is on its breakout formation, higher at this 80 cent level on a strong volume. So with that, we expect the momentum to keep bullish and the stock able to propel higher to test the next resistance at 85 cent level, resistance level, followed by this 87 cent level. So if the stock to clear the 78 cent support, this could reverse the cost and I mean the trend lower, right? So also next we have IGB REIT. So the stock is experiencing pending breakout, testing this 3 ringgit level. So if the stock remain bullish, you are expecting for the price to reach 3 ringgit and 20 cent in the coming session, together with high volume. And second resistance at 3 ringgit and 40 cent level. So keep an eye at this 2 ringgit and 80 cent level for any attempt of reversal. And for the third stocks, you know uh, we have MISC. So the stock is now forming a breakout formation, right? At the resistance of this 8 ringgit. So with that, we expect the momentum to remain bullish and the stock able to propel higher to test the next resistance at 8 ringgit and 40 cent. Followed by 8 ringgit and 60 cent level. So do watch out for this 7 ringgit and 80 cent support. And lastly, we have ANO, Eastern and Oriental, right? Uh, I mean, yeah, okay. So the stock has breached higher at the 74 cent level. With that, we continue to expect that the stock to travel higher towards 79 cent resistance, followed by 84 cents resistance level. So yeah, I think for now, support is back at 69 cent support, right? Then, oh yeah. So we have one, two, three, three breakout stocks, followed by one pending breakout for this IGB rate. Right, so for lastly for our FCPO, right? Well, it rallied yesterday to test the resistance, our resistance at 4240 on Monday session, as the export data showed that the surprising strong jump, um 9 to 10% uh, in terms of export, right? So which proving that the buyers are rushing to restock the before the New Year holiday. I mean the Chinese New Year holiday, despite the higher prices. So I think sentiment was further boosted by the surge in the Indian palm oil futures, which pull the FCPO higher as well, signaling that the Chinese demand is returning, just as the local production estimated to drop due to the monsoon season. So I expect a breakout, well, today, in today's session, above this 4240 level. Well, if the daily continues to rally this morning, I think the short squeeze could push the price towards the 4,300 level resistance, which is our second resistance, right? So yeah, our support remains back at the 4,000 the ringgit level, and our stop loss is seen at 3,900 level, right? Right. Also before I forgot, today I'll be having a bus webinar, right? And if you're free, let's come and join us. I got a lot of things to share, right? Right. So yeah, I'll stop here. Thanks everyone. Happy trading and see you again tomorrow. So I pass the floor to Siang. Thank you.
Okay, thanks, morning everyone. Let me continue with a results note on EcoShop Marketing. This is their second quarter of first half FY26 results, financial year ending May. Essentially, the results were in line with expectations, with core net profit coming in at 121 million, which is up 28% year on year. That's at 47 to 48% of our and consensus full year forecast. And we definitely can expect a better second half driven by better seasonality and festivities. If we look at numbers, first half sales was up only 3% despite adding 86 new stores. That's due to the rather soft same-store sales growth of negative 12.5% in the first half. Having said that, this is well offset by the much stronger gross margin expansion by 5.8 percentage points in the first half, and that's a function of price increase favorable forex and due to some reclassification of supplier rebates from other income into COGS. So the gross margin expansion has more than outpaced the rising OPEX in tandem with stock expansion, and that's the main earnings growth driver so far in first half. I think going forward, after the slightly disappointing same-store sales growth number in second quarter, the good news from the call yesterday is that management is expecting a strong SSSG turnaround or improvement in the coming quarter, as in third quarter, after having observed same-store sales growth getting close to positive number in the month of January. So with February being the month of Chinese New Year this year, definitely we can see more pickup in spending in the coming month. And what's driving that? Number one, a more targeted promotional strategy rather than across the board price discount. They are now having this marketing campaign, buy 5 free 1, in order to drive average basket size. And secondly, they have continued to work hard in getting or launching new products or exciting new products. Their target is to have 300 new SKUs every month. And at the same time, they have also relooked at the how they can enhance the store productivity, and some measures have been taken and they have worked quite effectively. Other than that, we believe our consumer sentiment recovery may have also helped to drive the strong sales momentum observed so far in this year. In addition, the supply chain disruption, which was another reason why the same-store sales growth was negative, was fully resolved in second quarter. So third quarter should see a normalized stock situation. We shouldn't see any sort of out of stock situation anymore in third quarter. Gross margin wise, despite the strong expansion, I think we can still expect more upside to it, given that last quarter actually still had 1 month impact of this price discount promotion, and third quarter shouldn't have any more. And on top of that, they should also benefit from a stronger ringgit and the rising scale, given that they have been expanding their stores quite aggressively. Speaking of new store openings, I think the pipeline remains rather robust, with 100 stores to be open for this financial year, to make sure that they seize the opportunities before their competitors do. The expansion will be carefully planned to avoid cannibalization, with close to 90% of the stores being located 15 km away from an existing store. Post results, we make no material changes to our earnings forecast, and then we tweak our target price slightly to 185, which implies 34 times forward PE at a discount to large cap consumer peers, given the smaller size. We maintain our positive stance on EcoShop, and our target price is now 1 ringgit 85. Let me stop here and pass the floor to Eddy. Thanks.
Thank you, Siang. I will be presenting my sector update report. We are maintaining our always stance on the healthcare sector. With the latest round of payer pressure largely absorbed, we do reaffirm our positive view on the sector going into 2026. I think we are still expecting a robust demand for private healthcare services, which owes to structural tailwinds such as your organic as well as inorganic expansion, if your medical tourism boom, as well as favorable demographics drivers, which includes your inelastic demand for healthcare services, a rising middle class, as well as growing health awareness, and also rapidly aging society. But in terms of sector-wise, the private healthcare sector actually enters 2026 against a backdrop of increasingly active policy interventions, which are primarily aimed at containing healthcare inflations. But overall, while none of these recent initiatives amount to disruptive overhaul in our view, these efforts collectively, they actually do signal some kind of gradual and structural recalibration of how private healthcare is being delivered, priced, as well as regulated. And at the same time, we see the government push towards a public sector reform, particularly in the primary as well as secondary care levels. That is expected to have a little bit of spillover effects for private providers. Um, Going straight into top picks, right? Um, Nothing has changed in our top pick. We still prefer KPJ. We still favor it for its robust margins as well as ROE, rising revenue intensity, and growing contributions from maturing hospitals, which all provides better visibility on earnings in the near term. KPJ is actually entering a very sweet spot as 6 of its hospitals are transitioning from loss-making to bottom line accretive. This would drive internal ROE expansion. Also, they are a bit largely, which is like the growth is largely independent of medical tourism trends, right? 5 to 7% of their group revenue comes from medical tourists. So unlike IHH, we believe KPJ offers a refuge to ringgit strength and lower growth dependency on medical tourism, right? Because of the smaller base. Also, while management continues to talk about, lifting revenue intensity via complex as well as high value specialized specialties case, we do think that, KPJ secondary care hospitals could be uniquely positioned to capture MHIT spillover, particularly where standardized base plan coverage actually meets the needs of price sensitive M40 segment. This is our view. But other than KPJ, we also maintain our buy call on IHH for its consistent execution, as well as the regional footprint and affluent patient focus that underpins earnings resilience. Other than that, we do have Duo Pharma, which actually is a beneficiary of ringgit strength. We are expecting 2026. We are expecting solid earnings visibility for 2026, and resilience in pharmaceutical demand, and then having set to ride on margin tailwinds in 2026. Overall, we are maintaining our overweight stance on the healthcare sector. I think key risk here, it's higher than expected operating costs. You have, lower than expected patient visits or revenue intensity, and maybe adverse regulatory changes. I think if USD weaken meaningfully, IH may face adverse FX translation effects on its overseas earnings. And again, Duo Pharma would benefit from cost relief on the imported active pharmaceutical ingredients or APIs. That's all I have for today. I believe I'm the last speaker. So see you again tomorrow at Morning Kappa at 8. Thank you.